I want you to imagine there are two different stores in your neighborhood selling the exact same toy. In the first store, the price tag says $88, but when you try to buy it, the clerk tells you they don't actually have the toy. They just have a piece of paper that says you own it. In the second store, the price tag says $110. It's more expensive, but there's a big difference. They have the actual toy right there, ready for you to take home. Which one is the real price? Right now, the world is split into two different prices for silver. In the West, places like New York and London are looking at paper silver and saying it's worth about $86 to $88. But in the East, at the Shanghai Gold Exchange in China, people are paying $110 or more for the real physical metal. This is what we call a price gap or premium. It means that in China, the actual silver is much harder to find, and people are willing to pay a bonus just to make sure they own the atoms and not just a promise. By the end of this briefing, you will understand the math behind this $20 gap. You will see why the paper market in the West is losing its power to tell the truth, and why the East is now leading the way in finding the real value of silver. We are witnessing the great decoupling in real time. This isn't just a chart wiggle, it's a sign that the physical world is winning the war against the paper world. Before we dive into the forensic evidence, I need to see who is standing on the side of the atoms. The people in charge want you to focus on the lower paper price so you don't realize how rare the real metal is becoming. To prove you are a real person and part of the resistance, comment "Wealth Unwired" and the word "physical" if you own the real metal. Let's show the gatekeepers how many of us aren't fooled by the paper lies. Let's look at the first piece of evidence, the two-tiered reality. In late January and early February 2026, the silver market did something historic. It crashed in the West, dropping nearly 40% in a few days. The paper price on the COMEX fell to around $78. But while the news was telling everyone that silver was failing, the physical market in Shanghai was screaming a different story. Even after the crash, the Shanghai Premium stayed massive. For a while, the gap was over 40%. That means if you had a magic teleporter, you could buy silver in New York for $80 and sell it in China for $112 instantly. In a normal world, people would do this until the prices became the same, but they can't. Why? Because there isn't enough real silver to move. The bridge between the East and the West has a giant hole in it. This brings us to the Shanghai smoking gun. Starting January 1st, 2026, China changed the rules. They made it very hard to send silver out of their country. They turned silver from a regular item into a strategic asset, just like the rare materials used in high-tech chips. China is the world's biggest factory. They need silver for solar panels, electric cars, and AI computers. They're basically saying, we're keeping our silver for our own future. You can play with your paper in the West, but we're holding on to the atoms.
When China keeps its silver, the vaults in the West start to drain. We have documented evidence that silver inventories in London and New York have dropped to their lowest levels in years. Because China isn't sharing, the West is running out of the real stuff. This is why the price in Shanghai is the leader. It reflects what industrial giants are actually paying to keep their factories running. The $88 price in New York is just a ghost. It's the price of a contract that rarely results in someone actually getting a silver bar. Now, let's talk about the oversold math. After the big drop to $78, the paper price started to bounce back to $86. On X and Reddit, people are posting two price screenshots. They are showing that even when the paper price goes up a little, the gap stays. This proves that the physical demand in the East is a floor that the paper market can't fall through. Think of it like a ball and a floor. The paper price is the ball, bouncing around. The physical price in Shanghai is the floor. If the ball tries to fall too low, it hits the reality of the East and has to bounce back up. The smart money knows this. They are ignoring the paper volatility and looking at the premium maps. When they see Shanghai holding at $110, they know that the $88 price in New York is a bargain if you can actually find someone to sell you the real metal at that price. The great decoupling means the two markets are getting a divorce. For a long time, New York told the world what silver was worth, but in 2026, the power is shifting. The East is the home of the physical discovery. They are the ones actually using the metal, so they are the ones who know its true value. If you are a physical stacker, this is your insurance. You don't care if the screen says $86 or $88. You know that across the ocean, people are desperate for what you have in your safe, and they are willing to pay $110 for it. You own the atoms in a world that is drowning in paper promises. The window to get silver at these paper prices is closing. As the gap stays wide, more people will realize that the New York price is a lie. When they all try to trade their paper for real silver at the same time, the system will break. Make sure you are on the right side of the fence before that happens. Don't let the paper noise scare you. Look at the physical reality. Follow the lead of the East and protect your wealth with the only thing that has been money for 5,000 years. Subscribe to Wealth Unwired. We are the lead investigators of the global reset, and we are here to show you the evidence the mainstream media refuses to cover. Stay vigilant. Investigation closed.